Well, good evening, all. I'm Epstein, and here we are with your Spider ETF stock market wrap-up. And this is for Wednesday evening, the 5th of February, 2025. And what a crazy day. Wow, we had a lot of information today. I was most impressed, obviously, with the very first part being the ADP numbers, where the private sector added quite a few jobs. They were looking for a gain from last week of about 30,000. They ended up getting almost double that, up to into the 180s. So that keeps that market strong. Yet at the same time, you'll notice if you take a look, the market created one of these waves. AMC not going anywhere. Gold market got up to nearly the 266 level, sold off. I did tell my clients today to take a bit of money off the table. They have been long in this. If they followed me, you never know if they do or don't, but that's what we saw there. Ford earnings came out after the bell. I don't see how this is going to hold up real well. Basically, they're out of the EV game for a while. It'll be a while before they get anywhere. One of the new things that they and other U.S. manufacturers especially are trying to do is, in order to extend range on these cars, they're trying to put generators in them. And with the generator, that can charge the battery. The battery, you don't have to go anywhere. You're driving your car and you're not running out, because I don't know anyone that owns one of these cars that wants to travel any distance that doesn't get uncomfortable with it, especially living in the Midwest. If you want to drive from here to Iowa, you might have some problems. And I know you'll think that sounds far away. 6, 7 hour drive, 8 hour drive. Okay, depends where you're going, obviously, but how comfortable are you doing it? That's it. That becomes the issue. The stock indices all came back. You saw Tesla take it on the chin, Amazon taking it on the chin today. I tried to get my clients into Netflix on the break today. We were far off. That wasn't even close. Microsoft holding steady. Meta doesn't give up, but at some point it will. Remember, it got up today to 718, and it did pull back pretty good, barely closing higher on the day. UAL giving up a little more. GameStop just sort of drifting around here. And uranium, well, it's been stuck for a long time, and I've made that part known to you. So let's take a look at what you get tomorrow. You're going to get Challenger Group with the planned U.S. job cuts. We'll see what the corporations want to do. We're going to get weekly jobless claims. They're due out at 7:30, looking for a little bit of an increase, nothing major. Fourth quarter preliminary non-farm productivity data. Yeah, that's going to be important. That'll come out at 7:30. You're going to get more numbers on the EI natural gas. They're looking this time with the moderation of, we're no longer in that crazy cold that we had, to we're pulling out 170 billion cubic feet. That compares still to more than the 110 on average that you get, you had a year ago week with the long-term average. I said that wrong. This is very close to it, of 174. What's happened is weather is moderated. We're going to be cold tonight in Chicago and parts of the Midwest, and not getting much out of the 30s right through the weekend, but that's not zero. And it's a lot different. So we'll see what happens. You get all that data at 7:30 in the morning. So interesting markets, no question about them. And as I'm looking at them, and you look at Meta, you can see how it stuck its head up there, but it did back off pretty good. So got to be a little cautious. Everything eventually gets a correction in it. Why, where's it going to come from? It doesn't matter. This market's gone straight from here, roughly the 590 level, all the way up to 718. I would not go chasing this market. I'd let it come to you, whatever you decide coming to you means. The pattern is one that, unless you take out 675 and a quarter, the pattern is still one of higher lows, higher highs. When we look and see why I'm saying what I am, it's because the market has been running this Bollinger Band forever, and it's starting to break away and not hit it anymore. That does not mean it's bearish. It might mean that we get something of a correction that is ready to step in as traders take some money off the table. As long as you keep the embedded reading, I'm not losing my bearishness. If you get the red line, which finished today at 89 roughly, to close under 79, then I look for more of a break wherever the 18-day average is. Maybe you get back down there. Not seeing that here. And the coffee drinkers are out like mad. They're still drinking away, and look at how they keep taking this up. I am sure that Starbucks is looking at this and salivating, going, God darn it, we used to be able to do that. And this stock is really on a run. But, Starbucks is also in a turnaround. CrowdStrike, excellent. This reminds me of a Palantir. Everything's behind it. It's in good shape. People need the products. I like these products. I think that, there's a real good ratio for them that's needed. Rivian, you found your support at the 100-day average in the 200, the gray and the green. Now you came up today, challenged the 18-day average of closes, missed it by 2 cents, but that to me is a challenge of it, and backed off a little bit. You need to really close over that to get friendly. Something, though, is happening. If you take a look here at the slow stochastic reading, let me walk you backwards in time. Both numbers were under 20, both under 20, both under 20. I can go on and on, all right? Then as we started coming up, watch what happens. Yesterday, you get up to a 2069. And unless you're down a lot today, the odds are you're going to lose the embedded reading, which you did. But all that calls for, because you're right on top of this 18-day average, was a challenge of it. It's not a really impressive move. So it's a sign not to be maybe as bearish as you were, but it's not a sign to go long yet from my perspective. Now, the lunar holiday's over and traders return to their trading desks in Asia, especially those paying attention. And instead of giving the markets a big bid, and it did start off on a firm note in China, it gave everything up by the end of the day, as they haven't done anything. And I think if people understand what's going on between Xi and Trump, this is not something that's going to end up good. All right, this is going to end up very bad. There's going to be a trade war between the two. China is not the other countries that the U.S. can push around. They're too big in terms of the population, the size of their economy, their power. Now, I'm not talking military, I'm talking their other powers. President Xi realizes, I believe he realizes, that the U.S. goal is not to let China get ahead of the U.S. in almost anything. And these two can't agree because of that. So I realize that all the white gloves are on right now and everybody's trying to do their best and pay respect to the other side and do it. But behind the scenes, or right in front of you, don't realize it, while we put tariffs and threatened other countries with tariffs, Mexico, Canada, we put the tariffs on China. That 10% went on. There was a flub dub. You saw today we had to figure out how to work with parcels coming in that are under $800 in value. At first they stopped them, then they realized that doesn't work. So what are they going to do? The administration has to work it out. And we've seen that. Where I don't criticize Trump is I realize he makes these moves and that becomes the problem because they're not well thought out, but he still doesn't have his whole cabinet in place and those people have to hire people. So I get it. On the other hand, when Trump said yesterday, Palestinians are going to leave Gaza, they got to find permanent placement elsewhere, game over. He's thinking as a developer, not as a politician. Those people aren't leaving that country. That's their home, buddy. They're staying there, and you can't force them out, Mr. President. All right, there's international laws. So it's nice to say the Mediterranean of the, the Riviera on the Mediterranean, but you want one that you can rebuild, help Lebanon. That used to be a real playground. Lower highs, lower lows, not a lot going on there. Coming back down, as I said, not liking what I see. When we come to the Toll Brothers and the XHB, okay, if you're watching interest rates, they're falling back on the 10-year towards 4.4. Is this sustainable becomes the big question. And by the way, let's give a little credit where credit is due here. Interest rates have gone from 4.8 just recently. I'm talking beginning of the year almost, right now to 4.4. Gasoline, crude oil, all those prices are down. The dollar down. Who wanted all those things down? I think it's named JWT or JDT. Oh, Trump. I forgot about that. He's the one that wanted to see all that down. And early on, the market is very accommodating to him. Very interesting. Spending political capital, but he's got market capital, and you can count on it. I just mentioned it. I'm telling you, this man's watching that. It's how he judges what's going on. In XHB, you can see you've had a rally back, and now the question is the 18-day average. So you've come off the lows. The markets haven't turned up in this or Toll Brothers, as we just saw, but they're also not dropping again, and that's the first step to stable. XLF, you still have higher lows, higher highs. Now, this one's very interesting. You'll notice you lost the embedded reading. Maybe we can come back to that. Let's see if I can get this to do it. Yeah. All right. So here you are. You lose the embedded reading, and this was on Tuesday. You gained it back today. So that's a bear trap. And even though this would have been a market that I would have said, the bears have entered the market looking for it to come down to 50.37 now. The problem with all my thinking there is once you re-embed, and the only time you can do it's the day after you lose it, market turns bullish again. Very important to see that. In XLI, we have lower highs, lower lows. The market closed right underneath the 18-day average. The bears are still in control, but you take out the highs of Tuesday at 137.70s. Let's see the exact high that it was. I'll give it to you right now. At 137.75 and close over that without getting through this 135.33, you could end up with higher lows, higher highs, and actually turn the market back to the bull trend. We already are seeing the 18-day average is playing games with the 100, trying to say the market should come back up with a bullish crossover if the market can do that. If not, it'll cross back down under it. So got to keep your eyes on this one. This is very important right here. On the energies, even with crude down pretty good today, you came back in all this. So you're fighting your battle right now for direction at the 100, the 18, and the 200-day average. The gray is the 200, the green, the 100, and the 18-day average. In the gold market, you've been running the upper band now. You're embedded. I told traders, as I told you today, take something off the table. If you took a look at the weekly chart, you'll see you're at the third flip of a window envelope. You're over the upper band. I'll wait for it to pull back. So I took the clients down to basically out of 100% position to 40%. So let's assume you had 100 shares that you bought. You took off a total of 60 so far. Nice, by the way. And you've got 40, and I want to buy the break. So I wait and see where that's going to fit in. It doesn't mean I'll be right, but I will put out buy signals, but not up here. I want to see the market pull back. If not, keep the 40%. Higher lows, higher highs, over the upper band. Market's a bit overbought. I don't see anything I'd have you do there. In copper, it's doing pretty much what I said. I thought the market would fight a battle here at the lower and the upper bands going sideways. Tell me that isn't what you have going on to the letter. I mean, this is absolutely non-tradable. This is a spinning market. But what does a non-tradable market mean? Day trades. And that's what this will become. This is right now a day trader's delight. I'll show you pivot points in a minute as I finish up the charts. And that's what traders probably use on markets like this. In BND, lower low, higher high, and now you're back into the resistance in an overbought market. Dollar index came down, but I think it's trying to fight here for support at the green line, the 100-day average down to these numbers, 29.11, the lower bands and all that through here, 29.01, the 200-day average with resistance at 29.50, and you're in a flip-flop in FXE. Lower lows, higher highs. So I'd pay attention to all that, but I do think that the markets are now waiting to see the next leg in the FX arena. The one thing that has happened is the dollar has fallen sharply in the futures markets over the past 4 or 5 sessions, and I think it caught a lot of traders unsuspecting. A very interesting time. So as you heard me talk about pivot points, and what pivot points are is it's a formula where the market looks at the prior day's range. And it picks from it the high, low, the open. There's a formula. You have it. It's all in your charting service. And it plots what we call the pivot, which is the white line. Below it are support zones, the blue and the darker blue, the orangish color, and then the red. These are the sell numbers. These are the buy numbers, all right? Think of it that way. They call them, when you take the course, of support 1, support 2, resistance 1, resistance 2. So you get used to the symbols, R for resistance and S for support. But this is on your charting service if you have a reasonable service, all right? It's a popular one. It's like having stochastics with it. And I tie stochastics to it, which most traders don't do. And when you use pivot points, you're not using daily charts. You're using it for the formula, but you're trading off of 15-minute chart. It could be a 10-minute. You're looking for the swings in the market that you can play with. Try different time frames. I have a 3-part video series that is free. And in it, I teach you how to do it, how to set your charts up. Admittedly, your slow stochastic readings won't be mine, but don't worry about that. You get the idea as to how it is. You'd have to be a subscriber of mine to my morning subscribers. Then I'll give you the formula to change yours with. You have to do a little bit of programming, though. IraEpstein.com. Go to free offers. In it, you'll see pivot points. Move your cursor up here. That'll take you to the free offer area. And we mail this right to you by, obviously, email when I say mail. And you should have it within a business day. I'm Ira. You have yourself a great trading day. And I'll catch up with you first thing in the morning. Take care.